All right, everyone. Welcome. Thank you for joining. I know a lot of you are going to keep piling in. You will catch up with us. So we are here today to really talk about how to use technology to execute on the best borrower retention strategy in the mortgage lending industry. And we're here thanks to Scott Payne. Scott, for all of you that know him and for some of you that don't, Scott is an expert at retention, an expert at setting up automated strategies and really, really supercharging the results that your teams get. So Scott Payne, thank you so much. He brings all of these technologies together. He came up with this concept. He wanted to share this with the world, and we're excited to be here. Scott, thank you again for allowing me to be the host here. Let me also introduce Hector Garcia. I didn't say it with the special twang that we talked about, Hector. So I apologize.
Oh, you got
Glacia, that's it. There you go. Hector from Velocify is here to join us. Excited to hear from you and all the things you're going to share. This man needs no introduction. Mike Eshelman from Jornaya. Thank you for joining us. And I will be your host, your moderator today, Alex Kutsishin from Sales Boomerang. I am the only one that can say my own last name. Which is why I am moderating today. So listen, this is a conversation. You guys noticed Mike started it. We're conversational here. So throw your questions in chat, get involved, throw out some comments. You hear some things, get involved with the conversation. This should be fun. Let's start with why borrower retention is important in the first place. Okay. And I'll start this conversation. I'll start us off, but I would love to see the rest of the panelists get involved here. So retention, number one, okay. Retention is a clear sign of how well your business is doing, how well your team is performing, how well you've connected with your customers, how much respect and trust your customers have for you. If you are like the average lender, you're doing about 15%. 15% of your customers want to come back and do business with you again, or remember to do business with you again, or trust you to do business with you again, which means 85% of your active borrowers are going to choose someone else every single time. 85% of your active borrowers, whenever I give this stat, I get this look, oh my goodness, 85% of my database is going to go somewhere else. Not today. The active ones. So out of your database, let's say you have 100,000 people in your database and 1,000 of them are active this year, 850 of them will go somewhere else. So that is so important to flip that number around and start getting it closer to the 60, 70, 80%. We're going to get into exactly how to get there. But the importance of retention is, number one, it's a clear sign of how well your business is doing. If people don't want to do business with you again, there's a sign about your business, right? Very important.
And Alex, I want to jump in real quick because
absolutely.
I actually just remembered there's a stat. I want to say it was north of 60%. So when lenders survey after a funding and ask the question, how did we do? Would you be willing to work with us again in the future? Well over 60%. I think it was 70+% said yes. So there is that opportunity. There's just a big disconnect from the people who say yes and who actually come through and do it.
Yes. And that's that gap right there that Mike just mentioned, which was brilliant. That's what we're going to fill in for you guys today. That's what we're here to do. So I love that. I love that connection, Mike. And again, Hector or Scott, if there's anything you want to jump in with as we're going through this, please jump in. So the importance, and this is again, sort of going back to what Mike was just talking about and the activity. Remember we said active. So when borrowers become active, okay, this is important too. This is an amazing stat. And by the way, we can back this stat up. We'll talk about it in just a second. It's very interesting. But 79% of your borrowers, okay, will go with the very first lender they speak with. And then 92% will go with the second or first. So, you know, this big fear out there that your customers are shopping around with 20 different lenders before they make a decision. It's just not true. It's just not the case. As a matter of fact, Sales Boomerang has over 6 million records that we're managing for our lender partners. And when we did this analysis, a little bit over 2% of borrowers exist in more than one database. Think about that. We have national, huge lenders and then regional and then local. And out of everyone, 2.2% exist in more than one database. That means your borrowers are shopping less than you can ever imagine. So what is the importance of this in retention? You want to be first or second. We didn't put up this picture, but you guys are all going to get a big smile on your face. You guys remember Ricky Bobby? His dad had some genius advice for us. He said, if you're not first, you're last. Well, in the mortgage industry, if you're not first or second, you're absolutely last, period. Okay. If you're not first or second, you are last. So you got to make sure to be first, or you have to be second. Hector, Scott, Mike, you guys want to add anything before we hand this off to Mike?
Yeah, I'll just jump in real quick, Alex. So I'll talk about something from the Velocify perspective, but we see the same exact thing, we'll throw some metrics at it. But more importantly, Scott's going to kind of show how we can get a quick response time to some of these signals that come up. So super valuable. It's something that we need to ingrain into everybody on the call today.
And look, Mike, right before we hand this off to you, you may cover some of this too. Everyone, all of you right now, have bloated databases from 2020, more deals in your database than you've ever had before. And so, Scott, you have a crystal ball because you set this up before, the year started, and we've been talking about this. Everyone is asking, how do I keep all of these customers? And so now it's more important than ever to understand retention. And Scott has put together the best in class technologies that help make that happen. And you're going to get to see one of them right now. Mike, the floor is yours, my friend.
Yeah, I appreciate it. So quick background on me. I've been in mortgage for 17 years, started in sales, went on to marketing, and was actually a client of Jornaya for a number of years before making the jump. So I used Velocify as my lead management system, worked with Hector back then and worked with Scott as well. I have a couple of awards for being top administrator in Velocify. I didn't actually win them. I just did whatever Scott told me to do. And lo and behold, I ended up getting the award. So I appreciate Scott. And so when I moved over to Jornaya, I loved what they were doing. I loved the behavioral data aspect. And if we hit the next slide, I'll give you a little bit of background on what we do. So Jornaya has a network of over 1,000 publisher partners, which essentially means over 35,000 comparison shopping websites managed by those 1,000 partners. These are the websites where consumers are searching for mortgage rates to compare. It also includes insurance, education, auto, and then real estate, searching for a realtor, looking for homes. But consumers are visiting these websites, looking and shopping and showing all of these intent signals. And when you stack up all of those consumer events that are occurring, it's over 1 billion shopping events that we're witnessing every single quarter.
Unbelievable.
So wherever you're buying leads, it's most likely they're running our technology on their site. We're able to witness the consumer activity, how long they're engaged, if they complete a web form, how many lead forms did they fill out across the ecosystem that we see in the last day, week, month, etc. All these behaviors tell us the level of intent of a consumer, and also what are they shopping for? Not just a mortgage. If they're on a mortgage page, they're interested in a mortgage, but are they looking at refinance related content, refi cash out content, home purchase, etc. So here's an example. The problem is really the timing of messages of when lenders are reaching out to their consumers. So imagine you have Aaliyah as a past customer in your database. You know certain pieces of information about her, maybe from the old funding or application or the lead that you purchased. So you may know she's 35 years old, married, has some dependents, bought a new home 2 years ago, right? You have all this information on the left side that you may already know. But what you don't know is that she started shopping around 3 months ago. Mm-hmm. She's been witnessed researching mortgage loans across 4 different websites, comparison shopping, also looking for insurance, homeowners insurance. And she tends to do her shopping activity in the evenings. You have no idea she is currently a retention risk or an opportunity for you to recapture a past customer. But we have data that says she's shopping around, and we can share that information with you if you have Aaliyah in your database. So if we go ahead and hit the next slide. So one of our mortgage clients, they reviewed their data to say, well, how does Jornaya's signal, it's what we call it. So when you tell us you want to know more about a consumer, we're going to tell you when that consumer is shopping around on those comparison shopping sites so that you can begin engaging, whether it's a phone call, an email, et cetera, and not have to wait for the credit trigger to come in or the payoff demand. So when our client looked at this and said, how much sooner is a Jornaya signal? It was 76 days before the MLS listing alert came in for someone who's on a home buyer journey. For a refinance journey, a consumer looking at a refinance opportunity, 68 days before the payoff inquiry, and then also 73 days before a credit trigger. So we have these different journeys. The mortgage journey is someone we know is in market for a mortgage, but maybe we don't know it's specifically a home purchase or refi.
Let me tell you. Sorry,
Yes.
Mike, I just want to jump in for a second as you get into this. I want to, you and I, we laughed about this the last time we were on together. This is, if people watching this have not heard of Jornaya, have not thought about this, this has to be like one of the coolest things you've ever heard, right? It's what, remember we talked about being in New York and hailing a cab, like the episode of Seinfeld. Like this is everyone that's listening. Think about this. When Jornaya is on for you, it's like you are up the block hailing a cab while the person is down the block and he's trying to catch a cab, and you're always going to get it first because you know exactly which direction the traffic is going and exactly where to stand to get the first cab. That's what this is about. And it's so beautiful to have access to this information. And I just want to make that like a physical connection there, Mike, for people that, okay, so what if this is really important. This is a great place to start communicating with your customers before they make those buying decisions. So I just wanted to kind of make it a physical experience for people. Sorry to jump in here,
Yeah,
Mike.
no, absolutely. Thank you for that. I mean, it's going back to that original stat of the percentage of people that are going to close the business if it's first contact or second contact.
Yep.
I mean, this gives you the earliest signals well in advance of anything else that is telling you the consumer is actively shopping around. They're actively seeking information. Jornaya data gives you that opportunity to influence their buying journey so that they come to within your sphere and you can lock in that first conversation. To give you an idea of actual stats, this I just screenshotted from our Tableau dashboard of a client of ours who's monitoring 3.2 million customers in their database. In the past 6 months, we've signaled on 9.5% of their database, which is 343,945 consumers that we've said this consumer is actively bouncing around researching mortgage options. Now, when we took that and ran it over the past 12 months, it's 13.22%. So it's a lot of activity of consumers that are shopping around. And if you focus in on those consumers, your engagement rates are going to be substantially higher. You're going to be able to get in front of more people first and really control that conversation. To get more granular on the next slide, the one on the left, this client has 2.5 million records being monitored. 0.27% were active yesterday. Now, that's granular, that's actionable. That is someone to prioritize today, to get on the phone today. Then you can also see in the middle of the previous week and then with the last.
Hey, Mike, somebody's asking, what's a shopping event?
Shopping event is a consumer landing on a page where it's specifically comparing mortgage lenders. They're looking at interest rates. They're actively researching the benefits of a refinance or, what to look for in a home purchase. How much money down do I need? Debt to income, whatever it may be. When you Google mortgage lenders, refinance rates, anything like that, it's oftentimes you're going to find these performance marketers, these lead generation companies, these comparison websites that land at the top in terms of the ads or organic. That's predominantly where we're placed. So when consumers are landing on those pages, that's a shopping event.
Amazing. I mean, listen, just for everyone that's in the audience, I mean, it's remarkable, right? Here's one group that yesterday had 6,800 opportunities in their own database that they didn't buy a lead. They didn't send out some marketing pieces. This is people in their database that they are looking after, and 6,800, right? What organization couldn't live off of 6,800 opportunities a day, right? Like it's that powerful. So,
and Mike, I wanted to mention a little earlier too, that, I've sat on these presentations for years. We've done the panels. I was a client there for a while too when I was at NationStar, and it's a lot of data. And so a lot of people on their call are probably thinking, wow, this is like kind of mind blowing, all of the stuff, right? And I talk to clients all the time where they're like, this all sounds great, but how do I actually use it? And so I just wanted to kind of preface it as we get into more of Alex's conversation coming up and more of Hector's coming up, that here in a little bit, I'm actually show you how you can actually use the data in a really easy way that doesn't require you to, really spend much time thinking about it. Now we're going to think strategy. We'll talk through strategy, but how to set it up in Velocify or whatever lead management system you're using is what I'm actually going to be showing here shortly. So just keep that in mind for those that are listening right now.
I love that teaser. What Scott just did to you guys is hooked you to the end of this conversation, because he will literally give you the blueprint to use all of this information to get the retention from 15% to 60. Like, you are going to get this on this call. This isn't like, hey, we're going to give you some things and figure out the rest. No, he's going to show you step by step. So I love that teaser. So stay glued to the screen and to your seats, guys. Mike, anything else you want to mention here?
No, I think we're good. That's the Jornaya data. It's great. It's easy to talk about in terms of, hey, when someone signals out of that 6,800 active shoppers, whether it's an email, phone call, whatever's most appropriate. I mean, it's combining this data along with whatever else you may know, including sales boomerang information that Scott's going to drive into how to action on all that. So I'll pass it over to you.
My man, thank you. That was excellent. That was fantastic. And by the way, the audience is responding. There's some people saying, hey, what amazing information. So now that I'll be talking, you'll get to monitor everyone that's chatting there and give them your feedback, Mike. Thanks, by the way, everyone that's been super active in the chat here. It's super boring being on a presentation that's virtual. We're all been doing virtual for a year almost, and having no activity and no communication gets kind of slow, but you guys are all super active. So keep it up. Let's talk about Sales Boomerang a little bit. And Mike, you and I discovered this not too long ago, if you remember, or maybe a year or two ago, where we said, hey, why does Sales Boomerang or Jornaya work so well together? And Scott is really the genius that said this is where the magic happens. Well, here's what happens. Jornaya is air cover, right? If we look at this as the military doesn't have one source of attack, right? They have multiple sources of attack, and air is one of them and ground is the other, right? There's water as well, but we'll talk about that down the road. We haven't found one of those companies yet. Or no aquatic attacks yet. But when fish start doing mortgages, I promise we'll figure something out. So Jornaya is air cover. All of that stuff that happens online, all of that activity, live activity that's happening online, Jornaya is tracking. They're giving you signals. They're letting you hail the cab way before anyone else sees it coming, so that you know it's coming. You know you're prepared for it. So then Sales Boomerang is the ground cover. It's the facts. It's the events. It's the things that are happening right now to support all of the predictive events that Jornaya is showing and have proven to be exceptionally right. We then say, hey, and it can go both ways. We can alert something before Jornaya, then Jornaya alerts it, or Jornaya alerts it, then Sales Boomerang alerts it. So what our clients, and I would say, by the way, that Jornaya falls into this category too, is we have become a utility, right? It is just like electricity and running. It is just like having your CRM in a place to hold your data and LOS, which again, you guys are going to hear from Hector in a minute. His company covers that entire gamut, right? But he's going to focus on the CRM part of it. However, it's all part of the utility of running a mortgage company, right? And so with Sales Boomerang, we have become a utility. It is something that is just letting you know every single time somebody in your database is ready for a loan. And now we'll talk about a little bit of this too. Not only are we saying they're ready for a loan, but what loan are they ready for? With our prescriptive scenarios, your teams are going to get a list every morning that says, Mike is qualified for a rate and term. Hector's qualified for a cash out. This person's qualified for a VA IRRRL, following your guidelines. That's why this is utility, turning the industry on its head and making sure it's something that you could just wake up to and know you're about to have a good conversation with one of your customers. What has this system accumulated over just a few short 3 years? Over $30 billion in new volume origination from inside your database. Remember, we're talking about retention. We're not talking about brand new client acquisition, even though you'll have prospects and turn downs and people in your database that have not become a customer yet. That is still retention. right? It's important to understand that when somebody is in your database, when I call you for help, when I want a mortgage, even though you didn't give me a mortgage, I'm your customer. I just haven't purchased yet. And if you use that mindset, you'll understand that all of that is retention. Net new is someone you've never talked to, never seen before. They've never talked to you before. That's net new. That's a different conversation. This is all about retention. And this over 30 billion in volume all came from existing databases. And yes, all of you who are giggling, I don't see anybody in chat cracking up about this slide. That is not Larry Messino. But Larry cracked up so hard about when he saw that because we couldn't get a photo from him in time. He's like, you just keep that there. And he's the one that actually coined the term that you guys are like utility. So it was really great. So why are we talking about retention? Why Scott brought us all together? Did you guys know that your customers are going to have 11 mortgage related transactions? In chat, you can say yes or no if you want to get involved in this conversation. If you didn't know that, this is a great piece of information to have. You know why? Because you're going to treat every conversation differently. And when you hang up this phone today, when you stop listening, you're going to call everyone on your team and say, hey, treat everyone with love and respect, because they're going to have 11 transactions, not the one we just did today, not maybe one more, but on average 11 transactions from purchase to the final reverse or sale of their last home. On average, 11 mortgage related transactions that your customers are going to have. And we, as a group you see here, we're going to show you how to get all of them, right? Our job is not to help you get one or two, is to get all 11. Or if you meet them on the fifth one, to get the next 6. That's the goal. That's what Jornaya, that's what Sales Boomerang focuses on. And then Scott and Hector and their technology is going to automate it, make it easy for you guys to take advantage of it. So what is Sales Boomerang statistics? What are we operating on, right? So first of all, it's about getting to a retention rate that is well above the average. You're going to see at the end of this conversation, we're going to show some companies that have proven that it is 100% possible at scale, not lucky, not I'm your local lender that works only in this one actually in this one zip code and everyone knows me there, so everyone comes back to me. We're talking about national scale. There's companies that have done it on a national level, which have proven that it can happen, that are not 2 times better. They're not at 30% retention. We're talking about over 70% retention rates, right? Our clients at Sales Boomerang are seeing, the lenders that we're working with are seeing a 24x on average, an average ROI of 24x, right? So when they're using retention, it's paying off big time. Huge lift in average loan in loan volume altogether. Close to we're getting to 40% and above 40% in some cases, but the average is between 20 and 40. And then this is my favorite, guys. This is truly my favorite. Mike, you guys are in the same ballpark here. We know the cost of acquisition in the mortgage industry is around $1,500 to $2,000 if you're really going out there marketing, advertising to get new clients. Well, the cost of acquisition with retention, and we track this, with us, it's under $300. Like it's amazing. And why is that important? It's not just the cost of acquisition. You know what that does to your business? All of the CEOs, owners, that are on the call right now, profitability. And if you have more profit, you can do more for your customers. You can do more for your team. So think about that for a second. The more profitable every deal is, the more you can give back to the borrower and to your team. Now, we heard Mike talking about sort of the rates at which things alert, and you'll see the statistic right over here in just a minute that we're going to pull up side by side. It's somewhere, it's that one. So you're going to see that statistic in a minute, how we add up. But here's how Sales Boomerang stacks up. In a course of a month, okay, take note. In a course of a month, if you have all of these signals running, this is all Sales Boomerang signals, including prescriptive scenarios. If you have all of these things turned on, 13.5% of your database will have an event every single month. Now that sounds crazy, but these aren't made up numbers. Everything you're seeing right in front of you, these are all numbers from the previous October to December. That's all real statistics, real alert rates. So 13.5%, if you multiply that times 12, you're looking at 160% of your database having an event every year. Now you're like, Alex, how is it possible to have more than what's in our database? Well, that means you have people that are going to have more than one event per year, and we're going to be tracking all of those things. Okay. And what happens when you start turning those things on? You have something like PRMG, great success story. The team at PRMG, every single part of their organization is using Sales Boomerang and borrower intelligence at every single department, from wholesale to retail to consumer, every single one of them. And they've taken their retention rates from about 18% to over 65%. Their borrowers, they retain now. Okay. Huge difference. And then remember we talked about air cover, ground cover. When you put Jornaya and Sales Boomerang together, again, Scott solved this brilliantly. When you put them together, now you're seeing over 15%, almost 16% of your database every single month, letting you know that they're in the market or going to be in the market soon. That's hard to ignore. Very hard to ignore. Thank you guys for giving me a minute to share about Sales Boomerang and how this all comes together. Let's hand it off to Hector. Hector, you ready to share with us what Velocify does?
Yeah, let's do it. Let's do it. So great stats there, guys. Great, great info. I want to just kind of hone in a little bit here now on the loan officer. And so, one of the systems that I've worked with for the last 10 years, is Velocify, but I am cognizant that some other organizations out there may not use Velocify. So a lot of this information and some of our best practices is translatable to other systems. It really comes down to data, and worked with Mike and Alex over the years on integrations between Velocify. So when it comes down to it, a lot of the things that we're going to talk about today are going to be possible in your system if
You're on mute, Hector.
Hector, you hit mute by accident.
So let's kind of talk about the loan officer here. So if you think about the loan officer, the day in the life of the loan officer, they got a bunch of things going on. They got to take notes on stuff. They got to remember to email someone back. They got to check their email. They got to respond to text messages, schedule appointments, follow up with people. Then they have to look at reporting, figure out are things falling through the cracks or not. And then they have to talk and communicate internally with their counterparts, and then also externally with potential borrowers to make sure that experience and that journey is a good one. And so when you think about trying to get all this stuff together, how do you do it, right? It's a challenge. And so it'd almost be nice if we just had like an easy button where you can kind of click here and figure out what the next best thing to do is. And so that's really where Velocify comes into play. And so what we're going to talk about today is some of the strategies on how you can get that all together in one system. And so we refer to it as the best-in-class strategy. And so if you think about the average sales team, these are the numbers that really tie into what Alex and Mike are referring to, is that about a third of signals that come into your system never receive a response from the rep. Either they're too busy, they didn't see it, they missed it, it's in their email inbox, maybe they're on vacation or whatnot. But one third of all signals just don't get a response. The average response time on some of these signals is two days, so 48 hours. And if the sales rep does have the ability to actually make a phone call to this person, there's only one contact attempt, so it's kind of one and done, right? You make one attempt and you move on to all the other things that you need to do in a day. At the end of the day, what it comes down to is meaningful conversations. And so what we found is 80% of all these signals never really even have a meaningful conversation. Maybe they have a kind of a quick conversation here, a request to get a call back, or hey, send me some information. But at the end of the day, we have to serve up meaningful conversations. And so that really kind of comes down to the art of the sale.
So Hector, can I jump in for just a second? Just everyone's listening. Check this out, just for a minute. What Hector just explained to everyone is why the retention rates are at 15%. What you see on the left side of the screen is the reason.
Uh-oh.
I think Alex, you froze there. You gotcha?
At least he's frozen in a great picture. We'll see if he comes back. But I think to fill in with what he's going to say is, there's a lot of missed opportunities. If there's a third of the signals that never receive a response, or it takes 48 hours to respond, that's just meaning you might be the third, fourth, 10th lender, whatever it may be, getting a hold of that consumer. And going back to that original stat, you got to be first or second.
Otherwise you're last, right? Am I back? Am I still frozen?
You're back. You're back.
Woo! Okay. Sorry. I just wanted to say that is the reason there's 15% retention rates. Go ahead, Hector.
No, it's great conversation. So when you think about our best-in-class strategy, you might look at this and think, hey, this is really simple stuff, Hector. Why are we even talking about it? And, if you want to see more stats on this, Chris or Scott and I have a ton of information that we can share with you, where we do some customer experience screenings and find exactly what we're talking about here. So, the best class strategy, you got to call and email every single signal that comes into the system. Aim for a quick first attempt. When you think about, these signals, they're potentially, they could be a lead. They could shop somewhere else out there. To Alex's point earlier, if they do shop, they could have that meaningful conversation with someone else. And then you're trying to get them back on the line at that point. So speed is of the essence. And then also perpetual follow-up, right? I mean, it's a fine balance of kind of overcalling and kind of undercalling, right? And so as we're even on this call, I'm in the market for refinance, and my loan officer's been blowing me up all day, right? And so
Hector, can you give your phone number and your email address and the property state you're looking in for everyone on the call?
Flood of
They already got his email, Mike. It's happening.
Right? What's your rate?
Yeah.
But at the end of the day, look, I'm not trying to blow these guys off. I'm busy myself. There's a bunch of things going on. So, the one that, the loan officer that I'm working with, and I'm working with 2 right now, right? I'm not working with 20, I'm working with 2. I am shopping them against each other, but the response time is really important. One of the guys has better rates, but he's not responding to me. I might go with the other person, right? So, but that's a decision that I'm going to have to, kind of come up with. At the end of the day, when you think about, maybe those 2 loan officers that I'm working with, what system do they have to kind of ensure that they're following up with me, right? And that comes down to that contact strategy. And so our best in class strategy says you got to prioritize the sales rep's time. In that diagram I showed earlier with the loan officer and multiple things to do throughout the day, your top loan officers on your team probably are very systematic. They have a method that's worked for them. It's tried and true. They could probably produce anywhere that they go, right? When you start to think about your middle tier and your lower tier performers, how do we make those loan officers better, right? That's the science of the sale. And what we've seen over and over again with these organizations is that's the key right there. Your lower tier performers, maybe they're new to the industry. Maybe they're, fresh out of college. Some organizations hire fresh out of college, and have them start, kind of learning the mortgage industry. But those are the people that we have to help, because if we can get the same system, the same strategy going across the board, that's where this is really powerful. That's exponential for your organization. So if we go to the next slide, we boil this down to 4 fundamentals of high performance, right? So matching the right record that comes into the system to the right salesperson is super important, right? So we may, and Scott's going to talk about this in a little bit, we may want to send that back to the originating loan officer, right? Send it back to someone, this person's looking to refi, they just purchased last year, whatnot. Let's get it back to Scott so that way he can work that relationship. But what if Scott's no longer with the organization, Scott's moved on, he's in a different department or whatever the case may be? Maybe we need to get that to somebody else. Or how about if Scott's on vacation, right? Scott was actually in Florida for a month in December. So let's say he's a loan officer, he's not working any records right now. Well, we then need to redistribute that. So we could give Scott a shot at it. If he can't get it, we need to get that into the hands of someone else. And on top of that, most of our successful organizations are using some sort of cloud dialing system, whether or not that's our system, Dial IQ, or Five9, or any of the other great systems that are out there. But integrating those cloud dialing systems with your CRM is really important. That way we can get that fast initial response.
Great advice there. That's something that everyone just needs to write down and implement.
Yeah, you got to have those 2 tied together. You got to be able to track all that data. And at the end of the day, enforcing this strategy is probably the most important thing. And, we're talking about workflow, we're talking about activity prioritization, we're talking about automation, emails and SMS. But the best example here is, Tom Brady's got a big game coming up this weekend. Head coach and offensive coordinator, they have a blueprint. They have a strategy that they're going in with. And it's up to the team members to execute that, right? But if these team members don't know the plays or they're doing their own thing, all of a sudden you're going to have chaos, right? And that doesn't, get you to the goal line, right? And so that's really what this strategy is all about. And that big loop there is continuous improvement. So you got to be able to look at your funnel insights. And most importantly, as the market changes, as your organization changes, you got to be able to iterate. You got to be able to make these changes in your live environment. And so what we're going to do now is we're actually going to take a step into Scott's world here in his big, beautiful mind to kind of show some of the things that he's configured and developed for organizations over the last year.
Yeah. Beautifully done, Hector. Everyone, fantastic. Scott, we are putting you on the floor and the spotlight is on you. So I know you want to share your screen.
Yes, sir.
So allow me to stop and for you to begin.
All right. Yeah. So
this is the exciting stuff, guys. Here it comes.
Yeah. So, where all of this comes from is that, I've been working with a number of clients over the past year, back in 2020. everyone's realizing they have all of this data at their fingertips. They have the Jornaya, the sales Boomerang, the volleys, they have all of the different tools, but are they actually all using it together in the right way? Are they integrating it all together? And what I was finding over time was that people were all using them kind of a little differently. Everyone was using it, partly this way. Most of it wasn't integrated with the lead management system. I'm going to talk a little bit about Velocify today, but as Hector mentions, this is kind of interchangeable with other lead management systems. And so what I wanted to do was just give a quick overview of the things that I find to be kind of the issues with integration challenges between these three systems in particular. First of all, what I find is that alerts are only updating the original lead record itself. And so sometimes this lead record could be 3 to 5 years old. It could be a loan that you funded 3 years ago. It's sitting in a loan officer's name who's still with the company, and it's just sitting there. And you kind of need it to be. You want to be able to see that funded conversion rate on reports. But that date added becomes a key piece to this to really track, manage, and really report and do a number of things. We need to take that part into account. I'll talk about that more in a moment. Second, those who are on the lead management system typically don't have access to current customer information, meaning that if I'm servicing a loan and that lead is 3 to 5 years old, all I have is the original lead record, data on that record. What was the source? What was the current interest rate at that time? And so they don't have access to these tools to show them what is the current rate, current balance, current payment, any other data points they might want to have right at their fingertips when calling the customers. We're going to address that as well. Now, a lot of lenders I work with have people on Velocify in particular, and then some have people not on Velocify, meaning maybe it's a retail loan officer. And so we're able to address those challenges as well. Right now, a non-lead management user is going to receive only an email notification on an alert. Maybe it's just once a day. But you're going to see how this causes problems. You may know how this causes problems because the people on this call know that it's very difficult to get information back from those non-lead management users, the non-Velocify users, to understand, have they worked the lead? Have they called it? Have they done what they needed to do? What is the success of the program? We're going to talk a little bit more about that. And then lastly, most companies I find will start some type of email drip campaign for these customers. When an alert happens with Jornaya, maybe we send out an email right away and we want to, be top of mind. So, magically we're having to send you emails now that we saw you online, right? They're starting to get these emails, but at least you'll be top of mind so that when they get ready to make that, to have their credit pulled, they're going to come to you, hopefully, and not somebody else. But what a lot of companies are not doing is tracking the engagement with those communications. Is the customer engaged with that content? Are they opening the emails? Are they clicking the emails? And then what are you using with that data? Are you going to use that for, well, I'll give you a little hint. We're going to use it for lead scoring. And the lead scoring is going to be pretty important as it relates to actually setting this stuff up. So as I move on, these are the three kind of key principles that is kind of the best in class from an integration standpoint. The first is we're going to make copies of lead records. So this is kind of a workflow here that I've built over time and threw in the cool images to match my podcast logo there. So we're going to dive into each one of these things here in just a moment. But the three key things to mention is we have our lead copy, the ability to take an old lead that was 3 to 5 years old, or maybe it was an aged lead from 9 months ago, and we want to make a copy of that lead record. We don't want to use that old lead record for this initiative. Second is we're going to have a new lead workflow for lead management users. For those loan officers on Velocify, we need to take into account a couple of key things there as it relates to when that lead gets created and we distribute it either to someone who originated the loan last time or to a new loan officer. And then lastly, we're going to have our non-lead management users with the ability to document outreach attempts back into the lead management system with just a click of a button, which I'll show you here in just a second. Let's jump to the next one. So the most important step, we're going to zoom in here on each one. This is kind of the overview, but let's start with, kind of what we're looking at from the original lead record. So if you think about your database, you have, again, these leads that are sitting out there. They could be someone who you originally funded and now maybe you're servicing that customer. Maybe it was a application that you took and that loan never funded, or maybe it was a lead that's been aged where you didn't make contact, or maybe you did make contact and they said not interested. You have lots of data there in your database. These original leads are going to stay assigned to that original user. We want to be able to track their conversion rates. Historically, we don't want to take this lead and reassign it to somebody else. You're going to increase someone's conversion rate who maybe didn't convert it, and you're going to decrease potentially someone's rate a little differently. And it's going to make it really difficult to track and report on. Other examples, again, I think this is typically when leads are older than 3 months. You might have leads that are a little newer than 3 months. Maybe you just redistribute those on some of these alerts. But anything older than 3 months, I found as a best practice to start there. So we're going to have this original lead record, and then we're going to ask our friends over at Jornaya and Sales Boomerang to start doing their watching. They're going to do their watching, and eventually we're going to have, and as Alex mentioned, 13% of your database is going to trigger at some point in the month. So we get that alert. So what do we do now? Again, mentioned some companies are sending emails to their loan officers. Some people are maybe updating the old lead records, as I mentioned. But here's what we're going to do: we're actually going to take an action on that original lead record. So we're going to work with Sales Boomerang and Jornaya to where when they have these alerts, we're going to actually have them update the original lead and take an action on that lead record. And what that action is going to do is, one, it's going to give us a really good data point to know that there was a Sales Boomerang trigger on January 16th in this case. Now we know that. We can use that date timestamp there as a lead scoring metric here in just a moment. But most importantly, this action is going to trigger a copy of the lead record. That lead record is going to be created. The date added will be today. The status will be new or ready for, waiting for distribution. And it's going to be eligible for new distribution, assuming, have rules in place where you try to route it back to the original LO, which, by the way, we can talk more about this offline, but one of the things I'm implementing now for a couple of clients is that we're going to look at the survey score from the previous transaction on a funded loan, and did that loan officer get a high score? If they get a high score, we're going to try to drive that lead back to them if the customer has an alert in the future. But if they didn't do a good job, the customer said they didn't do a good job, then fair game, we're going to send it to somebody else once it becomes a trigger down the road. So we can we can integrate those things as well, which I think is pretty next level stuff. Now, in this new lead record, we're going to take some of the original lead data and copy into the new lead. These are going to be things like, what is that lead ID? So we're going to call that the portfolio lead ID or original lead ID. We're going to use that lead ID for our integrations here to talk back to the original lead for future scoring and future alerts. We're probably going to want to copy maybe the original lead source into a field so we can attribute, a conversion back to the original lending tree lead from 9 months ago and give that some type of attribution there. Maybe we want to put in the status, the last status the lead was in, nurture, whatever the case may be. We might want to feed the original user, and then we're also going to feed the lead score, which I'll show here in just a second, more about lead scoring. Now, this data is going to copy into the new lead record. Also mention here that if you're updating that original lead record, that funded loan with your servicing data, so things like what is their current balance, that's important to know for the loan officer. What is their current escrow balance? There's some data that you have available in your servicing database that we can put in that original lead record so that when we make a copy of it, the loan officer has all the updated information right at their fingertips for that record. And then lastly, here's the talkback. This is the other important part. So when we create that new lead record, we're going to post the lead ID of the new record back into the original lead record. Another key piece here from an integration standpoint, when we want to tie back and track success and all of these things, we'll be able to go back and say, did this original lead record result in a funded loan based on these alerts that had happened? So another key piece there. So now I'm going to jump into the actual lead management user, a Velocify user, whatever lead management system whatever you use. I'm going to talk a little bit about what this workflow could look like. So over here on the left, I have this new lead that's created. We're going to, this could be something like an inactive LO. Like this happens a lot with organizations where you have a retail loan officer working a lead. They've originated a lead and they've moved on to another company. Those leads typically are going to come back into a consumer direct, business if you have the opportunity to do so. And so in doing that, we're going to look at whether the person's, inactive. Maybe it was you acquired the loan through a different, source, wholesale, whatever the case may be, or, correspondent. Those leads from a servicing standpoint, we're going to say we want to, route them to potentially a new loan officer. Now, same thing with age leads. You may say, hey, this LO 9 months ago didn't convert the lead. Maybe you don't want to send it back to that same person. You want to send it to somebody new. So we're going to solve for that. Now, the next piece is also pretty critical. And that is, are there any duplicate leads records for this customer? So as this customer has an alert, what if they've taken an application with another customer, 2 weeks ago, and they're working with a loan officer. If you don't have this important step in place, what's going to happen is your customer is going to potentially get worked by 2 loan officers, cause confusion, create a bad customer experience. So we're going to utilize a duplicate management strategy to say, has this lead been worked in the last 30 days? And if so, let's alert the original or the current loan officer who's working it. We'll give them a notification. We'll put it at the top of their priority view, letting them know that the customer they're currently working on had another alert, and they need to take that in mind, maybe reach out to the customer right away.
So Scott, real quick, just to ask this question for everyone that's listening right now, that can they use what you're sharing right now to implement in their own technologies? Like everything you're sharing right now is something that they can do with what they currently have in place, like all of your methodologies.
Absolutely. Yep.
Okay.
Yep.
Great.
Yeah, and done this many times now, figured out kind of what the nuanced stuff is, and we've gotten it, really honed in. So, I'll kind of speed through the next couple of slides to get to the actual demonstration part of it, but I just wanted to call out that duplicate management part because it's a pretty key piece. And then, the kind of the normal Velocify best practices take over. We, distribute the lead, prioritize view. If they work the lead, we redistribute it. If they work the lead, great, they keep it. But here's the next part. This is the retail loan officer type scenario where we have a retail loan officer who may not be in Velocify or may not be in the lead management system. We still want to do that duplicate check here. It's also very critical. Was there a lead record created for this in the past? We want to notify that retail loan officer that they have this record sitting out there that had another alert. That's number one. Number two is if there's not a duplicate, you don't have these users in Velocify. Retail loan officers typically are not logging into a Velocify every day to work these leads. So we got to make it really easy for them to be able to call the record and give us notification back as to how that conversation went or what happened. And then you can even set up things like, we sent you an alert, you didn't take an action on the lead record, which I'll show you more in a second. Maybe at that point, after 3 days, 5 days, 7 days, you decide you want to redistribute that opportunity to consumer direct. We can do all of that now, which is impossible to do if all you're doing is sending your retail loan officer a list of things to do every day or a list of alerts that they need to go through and call. We can now be very actionable. We can now potentially utilize the combination of a retail and consumer direct environment. That's a huge
benefit.
No doubt. And so, this is an example of what an email would look like coming out of Velocify. So as that loan officer, retail loan officer is getting a lead record assigned to them, quote unquote, assigned to them, we're actually going to send them an email that gives them information about what the alert was for. We even give them a script to read off of if they like. We tell them about what type of alert it is. And you'll notice down here, I have these hyperlinks here where the user can take an action on the lead record without logging into Velocify. They're hyperlinks. And if I call the record and I say I made contact, they simply click on this URL and it talks back to that lead record in Velocify, letting us know, it's been acknowledged, they've worked it, they've done their thing. And we can track it from a marketing perspective to understand, are these things converting? Are they working well? Last but not least, or I guess I have 2 more slides to get through real quick, and then I'm going to show you real quick a demonstration of how it actually works. The other key piece is we want to feed back the final disposition of these new leads back into the original lead record. What was the last disposition or what was the last status from these new leads that were created? And we want to be able to track that from a lead scoring perspective, which I'll talk more about here in a second. So just understand that there's also kind of a complete loop back all the way back to the original lead, letting that lead know what happened. Now, a lot of you may not know about lead scoring in Velocify. It's one of those things like a in and out. You have to know that secret menu. It's one of these things they added years ago, and it's actually free to add. We just need to help you configure it and get it set up. But long story short, what we can do is start to look at data points on the lead record itself and give it a score. Essentially, it runs through this entire model here and says, do any of these things apply? If so, give it a plus something, minus this. And at the end of the day, you end up with a lead score. I'll show you an example here in a second.
And real quick, I want to jump in because this lead scoring, imagine having a record, a consumer you care about. Jornaya has signaled that they're in market. Sales Boomerang has indicated in their alerts, the score is going to be through the roof. The way Alex and I have talked about it many times is like that consumer is so ripe. Get in your car, get in the plane, get over to the house, knock on the door because they are good to go.
No doubt. And we're keeping track of, emails open, right? So it's not even just, those alerts. We're keeping track of, did they open an email in the last week or the last month, or have they ever opened one of our nurture emails? We're using current loan data that maybe is updated. The balance now becomes 200 instead of 250. We need to know those things, and those potentially have an impact to the score. There's also a big part, especially in Velocify, they have a function called script form view. So as the loan officer is working through their list of leads and going through the prioritization, we can give them information about what type of alert this is. I see a lot of companies who will give them kind of here's an email with, and if you see this alert, it means this, and they've got to reference that. And at the end of the day, they don't do it. So when they come into the lead record, we're very clearly telling them what type of alert it was, what they need to say, and then giving them all of the customer information right there at their fingertips.
It is honestly just so turnkey and simple and perfect. It's just great.
Yeah, and this is again something that you could set up in Velocify. If you had Velocify, you could set it up literally today. You could go set up this script form view. It's ready to go. If you need help walking through how to do it, be happy to do that, and we can set up a call. The other thing I think I know Alex in this group really have talked a lot about it, is that making sure we're not overwhelming the customer on every alert you get. A lot of times when we get an alert and we just notify and they call, and it's kind of, by the end of the day, the customer might be a little overwhelmed. So in using lead scoring, you'll see here an example. This lead has a score of 31 because it has all of these attributes met. It clicked on a link today. It opened an email today. It was added in the last 30 days. The first loan rates between 6 and 10%. Who still has that? Monthly payment savings of this, and it has a sales boomerang alert within a certain time frame, and that ups the score a little bit. And in this case, it's a 31. And we're going to put that on the original lead record, and we're going to potentially use that as a decision point. You might say, if there was, or maybe we're getting that status back, right? If it didn't qualify, that brings it down to -10. We want that score to come down. So we're going to use that score at the time the alert happens. When it comes time to make the copy of the lead, we're going to look at the lead score at that moment and make a decision. Do we want to make a copy of this lead or not? Do we want to let it continue to nurture and sit? Or do we want to create a new lead record where we call it right away? And I think this is a key piece that we can take away from this one. And then last but not least, one of the things me and Mike worked on quite a bit back when he was a client of mine is that how do we use the data points that you have and how we outreach to the customer? This is an example on the screen here of studies that I've done that shows that the best time to call your leads. And ultimately what this story tells you is that the best time to call the customer is around the same time of the day that they originally acquired for the loan or the lead that came in. It also could be, if you're a servicer, you probably have when the customers called in. What time of day do they normally call in with questions about their account, or when have they logged into their account for certain things? You have lots of data at your fingertips that you can use, and we can leverage in the contact strategy so that we're not just sending that alert 8 o'clock in the morning. We're calling it every day at 8 o'clock. If we know the customer's online at noon every day because that's their lunch break, we're going to tee it up to be called around noon each day very easily in Velocify through a couple of settings we've built.
That on its own, by the way, Scott, what Mike and Jornaya's team can tell you about when to contact someone, that in itself is worth its weight in gold. Because how many of your loan officers call the customer and say, I can never reach them? Well, you're calling them when they have their meetings with their clients or with their team, or they're busy. But identifying the trends and when they're available, I mean, that's just gold.
No doubt. And we see, massive increase in contact rates and conversion rates off that when we layered in, especially on age leads. We've done all kinds of stuff, related back to even brand new leads, right? You can use it all over the place. So I want to give everyone a quick demonstration real quick as we wrap up. This is an actual client of mine, good buddy of mine. He said, you can, feel free to show it. So I want to call out a couple of things. This is a portfolio lead. This is a servicing customer we have. We know their current interest rates 5.75. The last time they did an FHA refi, ignore the date added. Imagine this date added is like 3 years old. It's an old loan that was funded. I want you to see right here, the lead score is a 10, and a 10 in this instance is really good. If it's a 10, let's say it's 5 or better, and we get an alert, we want to make a copy of the lead record and kind of start that initiation process. So let's actually look at how this would work. I'm going to simulate what happens when Sales Boomerang comes in and takes an alert. And of course that happens. Let's see. Here we go. So let me just make sure this is going to, worried about signing me out. It did. Let's go back. One moment. All right, here's our lead. We're going to take an action. And again, this isn't going to be someone taking an action. I'm just simulating that Sales Boomerang is taking an action on the lead record and what happens. So what you're going to see next is it's going to actually create a copy of the lead record, and it's going to try to distribute the lead to me right away to my user account. I'm going to get a pop-up that I have a new lead. I'm going to show you how I go into prioritize view and what I see there. And I also have to configure it as if I was also a retail loan officer, so that you can see what happens when I receive that email, how I click on the link, and how it takes an action on the lead record. So we'll run through this pretty quickly here. We can always do a better demonstration for those interested. So as I take this action here, you're going to see here that it's now created another lead record simply with that action. It tells me I've received a new lead because I was eligible to call it. I'm going to click ignore. I'll show you here in a second where it's at. But ultimately, you will now see this lead was created. It was copied over the contact information, it copied over the original loan information, the current interest rate information, it copied over the lead score. It also posted in that original lead ID here so that I can always track back and, and go back and try to match things up much easier. You'll see the status is waiting for distribution, but it's actually been distributed at this point, in which case the status is now new distributed. And so now the loan officer, all they're going to see is in their priority view, an alert that says this: new customer, new sales Boomerang alert. This customer just had a signal. They're going to jump into this lead record. They're going to call it. They're going to go to that script form view. It's going to tell them what type of alert it was or signal it was, and then they're going to reach out. When they call it, the customer, they're going to say, no contact, or the case may be, and we create a whole new workflow, a whole new strategy. This strategy is going to probably be a little bit more different than your leads you buy. You're not going to want to call them 3 times on day one. We're going to space that out a little bit. We're going to want to interject emails, auto emails, and SMS potentially if you have the ability to do that. And we want to be able to do, to have a different strategy. And by going through this route, we can do that. Now, it also sent me this email over here. I'm going to share my screen. So imagine I was a retail loan officer and this alert happened on that record. It sent me this email here. And again, it's giving me this information, giving me a script. I'll have contact information here. And let's say that I call the customer and no one answers, or I leave a message. Me, the user, retail loan officer, simply is going to click on this link. It's going to give them a little success message. And now if I go into this lead record here, you're going to see that an action was taken on this date and time. And the status of this lead is now contact attempt 1. And all it took for that retail loan officer was to get their email, call the customer, click on it, acknowledge it. When they're done, when they've converted down the road, they come either back to that email, or we can send additional emails to remind them for follow-ups. And now you can really use a strategy of both consumer direct and retail from one platform, giving you data, analytics you need back to the original lead record for scoring, and on down the line. I'll turn it back over to you, Alex.
Beautifully done. Wow. Just the information and the playbook, right? That's what you just got. And, when you presented, Scott, it's just everyone that's still on the call. Thank you for being with us. We had so much information and everyone went fast. So I appreciate everyone that's still here. You guys are going to get something extra that nobody else gets. Which is just to get to see our faces for an extra few minutes. No, plus some extra information you're about to get. But when Scott talks about this, the brilliance of Scott is that he's not talking about this as an I wish we could do this. He's talking about it in past tense. That's what he's done. And he's doing every day. And he's using Jornaya's information to drive results, using Sales Boomerang to drive results, using Hector's platform and Velocify to automate this, to make things easier, to really lend a hand to your team who is busy. You saw that thing that Hector presented that showed all the different things you're expecting your loan officer to do. Look, technology has done one thing, and one thing for sure. It's put 48 hours of work into a 10-hour day, okay? Because now we're able to multiply our effect and the things that we can get accomplished. But you can multiply the things you can do in a sloppy way, or you can do it in an efficient, directed, purposeful way so that your people can get 40 hours of work done and still only work that 8 hours. And be honest with you, Jornaya, Sales Boomerang, Scott, Hector, we actually want your team to work 5 or 6 hours and get 48 hours worth of work done. That's the truth. We want to give them hours of their life back. They're all home now. They get to hear their kids and their wives and husbands and friends. They need to be out there with them too. And this allows them to have that time to do that because we're targeting, just target a scope, exactly what you need to be doing. And look, we wouldn't be standing here today if we didn't think this was possible. And you're seeing a few companies on screen right now that have proven that it is possible. And not just to get incrementally better, not to go from 15 to 18 or 18 to 22, but to go from 15% to 70+%. And it's happening. Jornaya is making sure that's happening. Scott's automating the process, the technology in place with Velocify and other systems to make that happen. Sales Boomerang is making sure that you're getting 160% attention on your database. And these companies have proven that you don't have to be at 18%. Like, that's okay if you want to be okay. But nobody on this screen is okay with okay, right? We all want more. Sometimes, and I know Mike and I have left about this before, we want more for you more than you want more for you. Like, we're saying it's so possible. Just hear us out. Give us a chance. Give us a chance to work with your companies, and you guys will see the investment pays back dividends in a way you've never imagined. And you get somebody like Scott to implement these strategies. Listen, if 100% of you aren't calling Scott today to just be like, hey, I just want to understand a little bit more strategy, get a few hours of strategy time with him. Oh my goodness, change your business forever. Honestly, the way he uses the technologies at his fingertips is brilliant. Okay. So all of you, his email's out there. Don't hang up until you get that email, and you email him today and say, hey, can I get an hour of your time? It's just beautiful. So look, we're all here for you guys. We love what we do. We really do. We're all here because we love it. And we enjoyed this. And Scott, thank you for bringing us on today. Again, we'll leave the screen up for a minute. You can catch Scott. He's got an amazing podcast. He's got a bunch of ways that he gets content out there, but honestly, just call him, get with him, buy him a drink. He put this together. This was amazing. Mike and Jornaya, there's nobody better in the industry, in the country. Let me just go out there and say that, Mike, that does what you guys do better. You're the best in the world at what you do. And Sales Boomerang, same thing. We're the best in the world at what we do. And Velocify, you guys have heard that name more than anyone else in the industry. So you know they've got the process down right. So thank you for putting this together. For all of you that are still on, guess what? We're still here for you. You have questions? Type them in. We'll address them right now because we're here. Hector, Mike, and Scott, both, all four of us agreed to stay on a little bit later if anyone had questions. So if there's something that comes up, we will address it. I have my chat closed for some reason. Let's
and I
get
just
it open.
put a link in the chat to Jornaya's website, the AIM report, addressable in-market report. Anyone can upload your file of consumers that you care about and get an output to say, here's what percentage, just like I showed earlier, here's a percentage of consumers that were actively shopping around, to get a sense of how active people are in your database currently. So feel free to use that. It's a free tool.
Fantastic. Beautiful.
And one thing, Charity had a comment in there earlier about, could you potentially have retail loan officers using Velocify without ever logging into Velocify? And I think that's a great point to bring up, because really you could. You think about the email strategies, how we drip customers and how we send them emails based on this current status of the lead record, wherever it may sit. We could do that as well with your retail loan officers. And in this example, this is what we do. We let them know that, hey, you called the lead, right? You left a message. You told us that. We're going to send you another reminder 24 hours later saying, hey, call them again. Let us know. And they call it and take an action. And maybe they say they made contact. Okay, well, then they made contact. We're going to follow up a week later with them. Have you made progress? Ultimately, we could do that in Velocify. I have a couple of clients who've taken just that first step, not really full blown, but absolutely potential is there. And then using the status updates back from the LOS back into Velocify to notify the customer, notify certain parties, realtor, whatever it might be. You can do all of that as well. Another great use case.
It's so, listen, for those of you that are still on, I love that what you just said, Scott. I'm telling you right now, you can get 70% retention. It's not even a joke. Like, you can literally get there, and every deal becomes more profitable. And the healthier your retention rates, the healthier your business, because market changes. When market changes, people go to the thing they know they've had an experience with. I'll say it that way. They will go to that because the path of least resistance is to somebody that I've dealt with before. And so why the companies you see here get to a certain level, you're like, well, that's unattainable. It's attainable. Like Jornaya, Sales Boomerang, Velocify, Scott, we're all priced at a place where anyone that wants to get these results can actually do it. You don't have to invest $1 billion, right, Mike? When we talked about this before, these companies you see here, like the Rocket Mortgages, it's $1 billion into getting that done. You don't have to do that. Like, we've done all the hard work and the investments to make this easy. And then you have someone like Scott that can actually target the exact way you get the results that you want. So it's not impossible. Like, thinking about this industry a few years ago, it's like, yeah, 15, 20% is good. And no, we've realized, thankfully, with these companies going public, they've sort of shared their they let us look behind the curtain, and no wonder they've gotten to the levels they've gotten to. They figured out the retention game. They figured it out in the next 2 years. For those of you that are still on, the next 2 years, it's all about retention and getting those customers into your database, because the rates are going to stay low. The market's going to stay hot. You're going to get as many customers as you can. And then you're going to want to keep them there, and you're going to want to let them know that they're in a safe place and a comfortable place. So
finishing up on where we kind of started.
Yep.
We have lenders have so many leads from 2020, floods of inquiries. Clearly not all of them were converted. Those consumers, knowing who's still in market, who should still be engaged with, is going to be a high priority in 2021. So keep that in mind.
Yeah, it's great. Are we seeing? I know we have some team behind the scenes reading all of these. Are there any questions we should answer, guys? I know Richard and Steve are back there.
I think you're killing it, guys. I think you guys got most of them.
Okay, nothing outstanding that we should answer now. We can wrap this up for everyone.
I think it's time to wrap it up. Yeah.
Cool. Well, listen, this was fantastic. Honestly, this was exactly what we hoped for. Everyone was fantastic. Hector, thank you. Mike, fantastic. Thank you. Scott, of course, putting this together. Thank you for doing this, my man. Really enjoyed talking about all the things that people can do to help themselves, help their customers. So thanks for doing it.
You got it, guys. Great joining you. Thanks, everybody.
Have a great day.